Our overall view is the world is awash in cheap hydrocarbons. This is the glut that followed the energy crisis of 21 and 22. The world is gradually substituting to make room for cheaper hydrocarbons, which then diminishes incremental demand for oil. China is turning more coal into chemicals than every other country in the world burns. It's just amazing the scale that that's occurring. It's making diesel from coal. Oil and gas companies are deflationary powerhouses. Like, they are technology magicians, and they get better and better and better at finding more and more oil.
Doomberg, geopolitical and financial analyst, as well as editor of one of the most, if not the most, popular financial substacks. Doomberg, it's a true pleasure to host you on Palisades Gold Radio today.
Yeah, it's great to be back on the show.
Excellent. Really excited to hit the ground running, Doomberg, talking gold for a second. Big picture, we have seen an absolutely meteoric rise in the precious metals, and gold specifically is up over 55% year to date. I would love to hear from your perspective what has been happening to gold and where we are within the larger cycle for gold.
Yeah, sure. We view gold as a savings vehicle first and foremost. We don't view it as an investment. We also view gold as sort of the stationary center of the financial universe. And so when people say gold has had a great run, that's true, but that just means that you can buy less gold with the same amount of US dollars. And I think what's really going on is a repositioning of the global international trade, and gold is reasserting itself as a neutral reserve asset for the settlement of imbalances in international trade. The neutrality of the incumbent reserve asset, Western-based debt instruments, has been destroyed because of the sanctions war, first with Iran and then Russia, and then the tariff/sanctions war with China. So the freezing and attempted seizure of Russian reserve assets has destroyed for the rest of the world the neutrality of those financial instruments. And so, look, if you're in Britain or you're in, Sweden, you probably don't have to worry about whether your U.S. treasuries are money good. But if you're in, the Middle East, or you're in Asia, or you're an ally of China, then you certainly have to begin to worry about it. And so what is happening is, in our view, is gold is reasserting itself as a neutral reserve asset, and that puts a bid under gold. It also weakens the U.S. dollar, and so. But because it's a savings vehicle and not an investment vehicle, look, we did lighten a little bit up in the 4,300 range. I had way more gold as a share of our savings than I was comfortable with, mostly because the price of gold has appreciated in the U.S. dollar so aggressively. And so we rebalanced a little bit, but I still have an uncomfortably large position in it for sure.
I love this inversion framework, looking at it from the other direction, not gold being up, but US dollar, euro, Japanese yen being down. A lot of financial analysts are attributing central bank buying as a big driver behind gold. It sounds like you are flipping that around and talking about US dollar selling, rather.
Yeah, well, both. I mean, there's a crisis coming in the U.S. fiscal situation, and that's pretty clear. And the proof of that is just how short-term the debt structure has been termed inward, to shorter and shorter durations, starting with Janet Yellen and then increasingly aggressively with Scott Bessent. That's out of necessity, right? As Luke Gromen has pointed out for many years, central banks stopped being net purchasers of U.S. Treasuries in 2014, which happens to be when we think World War III kicked off, when Russia dumped its treasuries and started buying gold. And so that reality that the U.S. debt situation is untenable and potentially reaching a breaking point is causing people to wake up to the fact that gold is, a store of value with thousands of years of track record behind it, and it's nobody's credit. And so we still think gold has room to run, so to speak, in the sense that we think the Western-based, U.S. dollar financial system needs a reset. It just does. It's untenable. Look at Britain, look at France, look at Germany, look at the U.S. NATO lost a conventional war with Russia, and they're losing an economic war with China. And that's just reality. And how the West recognizes those losses is the big risk on the board.
Well understood. And talking about this trend of central banks buying gold and not really buying the US dollar treasuries, how long could a trend like this continue for?
Well, ultimately, one way out of the U.S. fiscal situation is to revalue the U.S.'s gold holdings, assuming they're real and auditable, at a much higher price than today. And I, again, go back to Luke Roman, who I love his stuff, Forest for the Trees. He puts out a great weekly newsletter, one of the many that we read. He estimates that China's trade imbalances would settle out at a $22,000 gold price, for example. I'm not calling for a $22,000 gold price, but in a world where gold is $20,000, the U.S., which currently marks its gold at $42 on the Fed's balance sheet, well, that's a pretty big mark-to-market gain that frees up a lot of flexibility for Scott Bessent at the U.S. Treasury. So why do I maintain a reasonably large position in gold? Is because if I wake up one day and that's happened and I'm not in it, I don't know how I could look myself in the mirror, right? So, we shall see. It is a dangerous time. These types of inflection points in history are always fraught with risk, and this time will be no different. We have a premium tier at Doomberg, not just our newsletter, but we do a monthly recorded presentation that we send out to our pro members. We call it a Doom Zoom, and this November's Doom Zoom is going to be on, it's called World War III, how it got here and where we're going. And we trace the full history back all the way to the color revolutions of the early 2000s into the global financial crisis, which created BRICS, which ultimately led to the situation in Ukraine, and then Putin dumping treasuries, and then we have like the real war in Ukraine and the trade war with China. And so it all sort of, you could trace that history, and when you do, you take a step back and you ignore the headlines and the propaganda, and you just try to get, facts and data. It paints a pretty disturbing picture in many ways, but also one that seems to be coming to a climax.
Today's episode of Palisades Gold Radio is proudly brought to you by our parent company, Palisades Goldcorp, Canada's leading junior resource investment vehicle, trading on the Toronto Venture Exchange under ticker symbol PALI, with equity and warrant positions in over 200 companies, ownership of mineral projects and royalties, and a significant stake in newfound gold. Palisades offers investors powerful, leveraged exposure to precious metals, uranium, copper, and other critical minerals. Palisades shareholders directly benefit from our team's extensive industry knowledge and access to deal flow, opportunities historically reserved for a small group of investors. To learn more, visit us at palisades.ca and join us in our mission to level the playing field for investors. Now, back to the show. One that seems to be coming to a climax. And this seems to fit into Doug Casey's idea of this last bull market in gold until remonetization that could occur. Talking about the incentives behind that for example, Trump and Scott Bessent to do so, could you walk us through what the incentives are both on the pros and the con side, for example, inflation?
Yeah, sure. All roads lead to debasement. We're in a unique situation in that the global reserve currency is being debased. And if the U.S. were not, a global reserve currency, it would have long ago entered into a debt spiral. Like once debt gets above 100% of GDP, as Lynn Alden's great book, I think she says something to the effect of there's no getting off this train. We're at a point now where interest and entitlements are soaking up essentially the U.S. tax receipts. And history teaches that hard defaults aren't likely, but soft defaults are a certainty, which means money will be printed. And so this is why I think you see these crazy valuations in the stock market, because owning equity is a hedge against debasement. And so this is sort of classic. In fact, the best hedge against inflation is actually debt. And so we posted on Notes, which is Substack's version of Twitter, that a 50-year mortgage is a great hedge against inflation, actually. The richest man to emerge from Weimar hyperinflation was the one who was allowed to borrow the most to buy factories. And so if you own a mortgage on your house, you're basically getting that house for free if soft default happens. And so that's the way we look at the world, of course, but it's sort of counterintuitive. But when you're thinking about hedges against inflation, gold is obviously one. Look, our view is that 20 gold eagles buys you a very well-appointed SUV, and in 20 years, 20 gold eagles will buy you a very nicely appointed SUV. And so that's just our worldview.
Well understood on that worldview. You mentioned some historical parallels there. Of course, this time is oftentimes being compared to the 1970s or the 2000s, and you just drew some parallels, at least to the Weimar Republic that we've seen. Are any of those historical parallels fair to draw, or might this time be different?
Well, every time is unique, and so parallels are just mental models that work for some of the observations that you see, and sometimes they don't work. I would characterize today more like the late 1920s. And so, boom times, stock market going crazy, then you have the crash. The thing that's different, of course, is that the central banks will step in, and everyone believes they'll step in, and so it's like a weird, the Fed put, so to speak. They will step in because they just can't allow stocks to go down. We're in this weird spot where if stocks go down, a debt crisis is triggered because tax receipts are linked to capital gains. And so the federal government cannot allow the stock market to go down. Well, that means nominally it won't. But the pressure relief valve has to be inflation and dollar weakness. And so I can tell you that my lived experience with regard to inflation is nothing like CPI. As an entrepreneur and a business owner, so I have to pay for my own health insurance and for the health insurance of my family, and it has gone up 15% a year like clockwork. Just got our 2026 premium notification in the mail, and 15% increase in premium and a 30% increase in total family out-of-pocket deductible. So I have like the cheapest plan I could get. Like I wish they would just let me buy catastrophe insurance at this point. So I'm legally obligated to buy this thing that all Americans have to have, and it goes up 15% a year. When I go buy my groceries, I can tell you that inflation is not 3%. The only thing keeping a lid on inflation, ironically, is gas prices and energy prices in the U.S. because energy is so abundant here. But the lived experience of the average voter, CPI is a joke, and so why wouldn't you go and gamble it on the stock market or in crypto or on gold and Bitcoin?
Why wouldn't you gamble it? This comparison of the late 1920s, of course, going into the Depression and a deflationary bust, you could say, of course, is differentiated with now that we have the Federal Reserve and we have inflationary pressures to increase of money supply. So that comparison wouldn't really be a great one for predicting the future, would it?
Right. That's why I said these historical models aren't ideal as a basis for analysis in our view, because the world has just changed so much. Technology, energy, regulatory. But in the end, what hasn't changed is that debt levels that become unsustainable get inflated away, sorry. And then you get, the deflationary bust that comes after that. But it's all part of the natural cycle. Our view is that the world is changing, and what emerges from the current world could be fine. It's probably going to be fine, but the path function is where the challenges arise. How do you get from here to there without absorbing a lot of pain? Or how do investors position themselves to have, if not to take advantage of it, then at least to sort of insulate yourself from the worst of it?
You mentioned earlier a significant fiscal problem, of course, Scott Bessent and Janet Yellen going for the short term on these treasuries and trying to finance them. Russia has recently come out, I believe, claiming that stablecoins might be a way for the US to, get rid of a debt burden or at least finance it. Is this something that you're seeing as well?
We believe that the whole movement towards stablecoins that Trump has embraced is, in fact, directly tied to this funding crisis. And it's really quite simple. Your on-ramp to the crypto world is through a stablecoin. And if you're a stablecoin operator, you're happy to park that in T-bills, short-term notes, and keep refinancing it. And there's a world that we see coming where, because by the way, like it's a great business. Like the people who are buying stablecoins are forfeiting the coupon of the underlying treasuries to the stablecoin operators. There's a world where stablecoins get big enough, and then the U.S. government decides to issue to stablecoin operators a T-bill with a smaller coupon. It's just a form of financial repression. And so every $1 trillion of stablecoin market cap is $1 trillion less that the government has to worry about rolling. And that's pretty powerful. And that's why I think you see this big push, the Genius Act and all of that stuff. And it's the losers, of course, are the people buying the stablecoins because they're getting a US dollar with no yield, essentially, to go and gamble at the casino. And so, yeah, when the full history of Tether is explained, I think people will be surprised by who the architects of it were. We used to be quite skeptical about Tether until we realized what was probably actually going on. We used to write a lot more about Bitcoin than we do now for a variety of reasons, but it's still something I keep a close eye on.
All right. And we were talking about remonetization of gold for a second. A lot of people are speculating that BRICS might do so through a settlement currency potentially. What do you think the likelihood of this actually occurring is?
Yeah, I think very high. I think BRICS, people talk about replacing the dollar. It's not really replacing the dollar. It's organizing global trade outside of the Western-based US dollar system. And one of the constraints to doing that is the unwillingness to hold anybody else's currency, in large sums. And so to the extent that some basket of BRICS currencies is used with gold as sort of the gold-backed, who knows? Structures are being considered, contemplated, worked on. Just look at the growth of Alipay and WeChat Pay. These are payment rails that do not involve Western banks. They are sanction-proof. And Talib's law, which is a piece we wrote, about gas turbines, applies here. Like if all shortages are followed by gluts, and so if you create an artificial shortage in the ability of countries to trade because you're crimping access to banking via the U.S. dollar, you're going to create a glut of ways for people to trade eventually, because people have to trade. The demand for global trade is inelastic in the sense that it happens whether or not the dollar is used. It has to happen. It increases the friction of, temporarily increases the friction of global trade when you impose sanctions on Chinese semiconductor industry, but trying to sanction China's semiconductor industry is going to result in a glut of Chinese semiconductor manufacturing. It always backfires. We've been consistent that the sanctions war on Russia would fail from the beginning. We wrote about this in April of 2022, weeks after it was first rolled out. We were correct. We're still correct to say that sanctioning Lukoil and this is all going to fail. The U.S. no longer has escalation dominance, militarily or economically, and bluffs are being called left and right.
Yeah, and it seems that this trade war that's been ongoing between the United States and China, it seemed like it dominated the news cycle completely at the start of this year, and now it almost feels like a nothing burger. It also feels like we might not really have felt the impact yet of it. Is that the case?
Yeah, I think the reason why it's fallen off the radar is because the U.S. lost, and the U.S. as a culture doesn't like to lose and doesn't like to read about the fact that it lost. And some of our subscribers get annoyed when we say this, but it's true. China stared down the U.S. and the U.S. had to blink. The U.S. does not have escalation dominance with China because China dominates rare earths, which is something we've been writing about for many years. It's amazing to us how clear it is to see such things, and yet very few people articulate it in that way or understand what's happening in real time through those lenses. Like, of course we cannot go into an economic war with China. They will win. They have won. And we're lucky that they've decided to allow us to blink. They have complete escalation dominance, and they've, frankly, military dominance now too. The U.S. cannot win a war against China. The neocon, uniparty, forever war wing in Washington, D.C. might think that the U.S. can go to war with anybody, but the rest of the world has taken notice of what happened in Ukraine and what's happening in the trade war with China.
You mentioned rare earths. Talking other critical minerals, we've seen export bans in, for example, tungsten and antimony in recent times. Is that a different, battle opening up in this trade war?
Look, China has escalation dominance in many critical supply chains, not just rare earths, silver, right? China has spent decades systematically achieving monopoly positions in critical materials. They did it openly, bluntly, illegally, in many cases, illegally dumping onto markets and subsidizing their domestic champions, debasing their environment. But they did it. And look, the West allowed them to do it. The stock markets cheered it on. We've said one thing that the free capital markets are very bad at pricing is national security risk. It's just not taken into account. Quarterly efficiency, stock options, did you beat your earnings by a penny? Well, if you could add 3 cents to your earnings by moving something to China, even if it costs the U.S. a nickel to get it back, it happens, right? And so this is where we are. This is the logical outcome of decades of bad policy. And Trump, to his credit, recognizes it and is trying to undo it, but I don't know whether the U.S. can get it done at a speed and scale that's needed.
Do you reckon we'll see more export restrictions in different critical commodities? And would this then be a tradable event, something you can make, nice returns on by trading it?
I mean, we don't trade, so but we have many subscribers who do. I think that idea has long since been recognized by the market, and most of the easy money has probably been made. And by the way, the gluts that follow such shortages means that all the rare earth stocks that are flying now and critical mineral stocks that are flying now will eventually, many of them will zero out. It's just going to be a boom bust. And so, like gas turbines, right? I mean, yes, there's a shortage now, but there won't be for very long. And so the market tells you what it wants, and then once it gets delivered, it regresses back to the mean. So one way you could do it is to begin to fade some of these names that have gone so crazy, even though that's probably a bit early. But in the long run, the valuations we're seeing aren't really sustainable because there's just going to be a glut. You won't be able to give away rare earths in 5 years. It's just going to be an enormous amount of rare earths on the market, most of the new supply will be not from China. But the rare earths are not rare. What's rare is the willingness to endure the environmental degradation that comes with processing them.
Really interesting take there, Doomberg. I would love to transition to energy. I know that's one of the big areas that you focus on with your Substack. Recently had a few analysts on, for example, Joseph Schechter and Josh Young, who are predicting a demand shortfall in oil and gas. I would love to hear your take on that. They're seeing an increased demand heading into 2026 and a shortfall of supply, not enough supply that could come online quickly. What are you seeing for 2026?
Well, we have a wildly different view than both of those gentlemen. I listened to some of the podcasts that you just mentioned. The problem with people who want oil to go higher is they can indulge in a bit of what we call wish casting, where you look for signs that confirm your view that oil will go higher, as opposed to objectively analyzing the market and saying, where's oil going? The world is awash in oil, and the world is gradually substituting to make room for cheaper hydrocarbons, which then diminishes incremental demand for oil. We're working on a piece right now. China is turning more coal into oil or chemicals than every other country in the world burns. It's just amazing the scale that's occurring, but also China is switching diesel trucks for LNG. It's making diesel from coal. You can't have the cleanest burning hydrocarbon on the board, natural gas, sell for the equivalent of $20 a barrel oil indefinitely. There's a grand arbitrage. And so the problem with oil analysis is most of the sort of indicators are their effectiveness is continuously being reduced by technology. So just take rig count. Oh, rig count's down. Well, how much oil are you producing per rig, right? And the oil and gas companies are deflationary powerhouses. Like, they are technology magicians, and they get better and better and better at finding more and more oil. And just take like oil inventories don't matter near as much anymore, because the speed with which new oil can be brought in using the latest technology is such that you don't need to have that much in inventory. And so our overall view is the world is awash in cheap hydrocarbons. This is the glut that followed the energy crisis of 21 and 22. And there's no shortage of oil. And worse for oil still is this phenomenon of co-production of oil and gas in the US being the sort of marginal producer on the global stage in a world where natural gas is in hot demand because of AI. And natural gas in, say, the Permian gets to $4, $5, $6, $7 a million BTU as opposed to negative spot prices that we see today. And people start drilling for natural gas on purpose. Well, then oil becomes the nuisance byproduct that they are happy to give away. So when people say, what's the break-even price of oil in the Permian, you can't answer that question. What is the break-even price of gas and oil together and the ratios in which they are being produced? Co-production economics is tricky. Having competed against co-producers in my time in industry, there's nothing worse than being a pure play producer of just natural gas or just oil and competing with somebody who's producing both at the same time, because they're agnostic to which of the two molecules they're going to get paid on. And so our equilibrium price for oil is $55 a barrel. We arrive at that number because that's the break-even price for natural gas producers in Appalachia to send through pipelines to a liquefaction plant and have LNG land in Europe. At $10 a million BTU landed LNG, everybody in that supply chain makes money. And then you multiply that by 5.6 and you get $56 oil. And so Brent crude and the European natural gas Dutch TTF contract, you multiply the Dutch TTF by 5.6 and plot it against Brent crude, and the correlation is 0.95. They trade in lockstep with each other, and that's because they're substitutable. And so in the end, we're approaching equilibrium, but there's nothing on the board, like nothing. Coal, natural gas, LNG, that says there's a shortage of hydrocarbons emerging. And with each new engine that's switched or molecules that are switched, the arbitrage grinds lower. Oil is a managed market. OPEC is a cartel, and it has kept oil expensive for a very long time relative to natural gas, especially in the US, and that will be its undoing. It has to, because arbitrage is closed. They always do. It might take a while, but when there's money to be made, you're going to buy $20 oil gas and sell $60 oil, and that's just a grinding arbitrage. And so our view is that the long-term real price of all commodities is lower. Gold is not a commodity in this context. And so we would never get long commodities because it's like, buying the VIX. It just grinds away at you. And every once in a while you see a spike because demand for oil is inelastic. And our view is it's much, much better to fade those spikes than to try to time them. So that's our analysis, which is obviously wildly different than your two prior guests, and that's fine. I mean, they're both smart people and express their views intelligently and authentically, but we see nothing to get excited about the price of oil in the next 18 months.
Always interesting to hear a contrarian take, Doomberg. Very appreciate that take. A potential way to play this arbitrage could, of course, be shale oil producers that co-produce natural gas and oil and natural gas liquids like you outlined before. If that arbitrage closes, they'll probably make more profits on the natural gas side, a bit less profits on the oil side, and you could benefit as a potential investor, I suppose.
Yeah, we generally don't like to buy the producers. In our view, if the greatest energy trade you can make is anything that is tied to the volume of energy production and not the price. And so the global demand for hydrocarbons will grow. Nice to see the IEA come to our view at some point. So yes, there will be a an ever-growing demand for hydrocarbons, but you want to be long people who are tied to volume, not price. And producers are price takers, right? And so if you're a midstreamer, I'd be far more interested in a midstreamer paying me 8% dividend than an energy producer paying me a 4% dividend. So like, it's not that it's like investing advice, but a royalty company who, gets a certain percentage, a certain dollar price per barrel of oil produced on their property is interesting to me. The actual drillers are far less interesting to me. Now, if you're a service provider, I'd be very interested in people who are helping debottleneck the produced water constraints in the Permian, for example. Those are the types of things that are interesting to us. The actual producers themselves, again, they're price takers, and the long-term real price of their product is lower. That just seems like a challenging business to be in.
All right, well understood. I would love to talk about peak oil for a second. This is something that keeps being predicted time and time again, a concept of peak oil demand or even peak oil supply, just a few years down the road. Why does this keep being predicted, and why has it still not occurred?
Well, it hasn't occurred because peak cheap oil is nonsense. It's a myth. There's an enormous amount of hydrocarbons under the earth. And society's getting better and better at pulling it to the surface. There's so much natural gas in the U.S., it would blow your mind. The U.S. has doubled its natural gas production, not trying. It would rather not make so much natural gas. This is because of technology, like we said. Why does the concept of, first of all, peak oil demand is even sillier than peak oil supply. Peak oil demand, the demand for oil is infinite. It's just a matter of price. The energy is life. People want a better standard of living. Hydrocarbons are an enormous and enormously powerful source of energy. So if Europe decides not to burn any coal, of course India is going to greedily take its spot and burn whatever coal is produced. Our Doomberg's postulate is that every molecule of hydrocarbons produced will be burned by somebody somewhere, and the privilege of doing so just shifts based on local restrictions against it. And so there's an enormous amount of oil underground. Just in the Western Hemisphere, there's 10 to 15 million incremental barrels per day of production waiting to be tapped. What constrains oil production is not geology, it's politics, period. Just look at Venezuela. It used to produce 4 million barrels a day, should be producing 5 or 6, and it only produces 1. It's nothing to do with the hydrocarbon resource base of Venezuela. It has everything to do with the political crisis that the country has been going through. I only bring up Venezuela because obviously the U.S. is going to war with Venezuela here soon. But the peak oil, why does it keep coming up? I think because it gets clicks. And again, there's a whole cadre of people who want the price of oil to go up, and this is a great myth around which to create a bull case. We wrote peak cheap oil is a myth a couple of years ago. We got a lot of heat for it. We debated Adam Rosenzweig from GNR on Adam Taggart's show. If you go back and listen to it was in January of 2024. I think we were right. Just plot the long-term price of oil in ounces of gold. Tell me where peak cheap oil is on that chart. It's not. The inflation-adjusted price of oil using the Bloomberg, I think it's $1983, like $18 a barrel. Oil is cheap. It's plentiful. We know how to get it. We know where to go find it. And so, whenever somebody says that we're running out of oil or gas, at some point you have to roll your eyes. It's like, it's just not going to happen.
Incredibly interesting to hear that, the United States has almost plentiful, almost infinite reserves of natural gas and oil. There's this concept of energy equals GDP, or at least very closely correlates to GDP. Could you also make this argument the United States has incredible potential to grow its gross domestic product over the next few years due to that incredibly cheap energy available to it?
Absolutely. Look, if the U.S. could just get its political house in order, it has an incredible foundation from which to grow from. If the U.S. government put a $6 per million BTU floor price under natural gas today, natural gas production could double again. There's just so much of it. It's unbelievable. And this is a huge advantage, for the U.S. And one of the reasons why we think the European Union has to collapse, because it doesn't produce its own hydrocarbons. And we think the drive to the Western Hemisphere is all about oil. We wrote a piece called Mosaic Theory, where we walk through what's going to happen in, South America. And we predicted that Argentina would have to be bailed out, that tensions would grow with Colombia, that Venezuela, there would be a conflict there. You could see it coming from a mile away, and it's all through the lens of energy. But yes, to your question, the U.S. is not actually broke. The U.S. has a governance issue, a severe federal mismanagement of taxpayer money, unsustainable grift. Like, for example, we're watching with interest what the government is doing with SNAP benefits. Not sure if you're aware, but the alleged policy of the Trump administration is that everybody now needs to reapply and prove, A, that they're a citizen, and B, that they need it. Well, if you did that with Social Security, a lot of the Social Security crisis would go away. Most of Washington, D.C.'s spending is nothing more than theft and grift, right? And no financial system couldn't withstand that. But what emerges from that in the U.S., the U.S. has enormous resources. Number one gas producer in the world by a wide margin. Number one oil producer in the world by a wide margin. Largest coal reserves. 90 operating nuclear reactors. The Mississippi River and all the ports and all the things that make the U.S. The breadbasket of it. It's got enormous potential, and it's only because of that foundation that it can mismanage itself in the way that it has and still be very powerful.
Incredibly interesting, Doomberg. I believe you mentioned there, and perhaps I misheard, that the EU doesn't produce enough hydrocarbons itself, and therefore it has to collapse. You could, of course, make the argument that Norway, the UK, even the Netherlands have incredible reserves of hydrocarbons, natural gas, and light oils, that they could produce this if the political mandate was there. Could this turn the tide?
So, first of all, Norway and the UK are not in the EU.
Good point.
And therefore are excluded from my analysis of the European Union. Norway gained, what the European Union is calling, a war profiteering during the gas crisis, because it made something like 150 billion extra euros because of elevated gas prices. Well, that went out of the EU into Norway. Now the EU is trying to get some of it back to give to Ukraine, but that's a whole other story. So the 27 member states of the European Union in 2024 consumed 38 exajoules of hydrocarbons and produced 4.7 exajoules of hydrocarbons. It effectively had to import the equivalent of the US's entire natural gas production in hydrocarbons as measured in exajoules. And they have to pay everybody's cost of capital in those long supply chains before that molecule gets there. And that's why fascinating to read in the Financial Times, the long expose, the big read. Can Germany's industrial, can German industry ever turn the corner? And the whole multi-thousand word essay doesn't mention energy once. So the European Union could paper it over when it was getting tons of cheap natural gas from Russia via pipeline, and Germany had one of the world's greatest nuclear power fleets. So then you could tinker around with wind and solar in that case and still be okay. But when you cut off cheap Russian gas and you replace it with expensive LNG and you dismantle your own nuclear power sector and one of the greatest own goals of all time, no, Germany's industry can't recover, because energy feeds industry, industry feeds the military, and if you kneecap yourself on energy, then you're done. And they have. And the fact that the Financial Times could run that article and not even mention energy tells you how far away Europe is from recognizing the problem, let alone getting serious about fixing it.
And is this a trend that might be reversible? I believe the Netherlands and the north part of Germany have the 10th largest natural gas resource in the world on its continental shelf. If they were to produce from that again, would this be a trend that could be reversible?
Sure, but not with the current EU structure. That's why we say the EU structure has to go. Physics says the European Union must dismantle. And we're beginning to see cracks, right? Hungary, Slovakia, Czech Republic. We'll see what happens in France. and I know the UK is not in the European Union, although Starmer would love to get the country back into it. They're pretty heading towards a fiscal cliff of their own. And so until the EU is gone, Ursula von der Leyen, Kai Kallas, the whole crew, it won't get fixed, and therefore it will continue to spiral, and that which can't go on forever usually doesn't. And so on the path from abundance to starvation is riot, first politically and then physically. And we're in the middle of a mini political riot in Europe, and we'll see. So Germany can't fix itself until Germany fixes its energy policy. And nobody in the European Union is talking in this language or even thinking about it, and so more pain coming. So yes, it will eventually be tradable. I would get long Germany post-EU, for sure. But they're still in the EU.
What type of time frame might we be talking about before this EU must dismantle itself?
I mean, I think it doesn't have many years left. And I just think that once the war in Ukraine is recognized as the loss that it is, that's going to be the beginning of the end of the EU, in our view. And that's why there's such opposition to Trump's efforts to try and come to terms with Russia. And we're seeing an accelerating decay on the battlefield. I follow it every day. And that's when I think, the propaganda. So we read everybody's propaganda here. This is one of the most interesting things to do, is to take a world scale news item, like something that is making global headlines, and then read 8 different countries' coverage of it. Really eye-opening to see how things are how stories are told around the world. And I tell you, without hesitation, that the worst of the worst propaganda is British propaganda. I mean, it's just totally made up. And the people of the EU and the people of Britain have been told a certain story about the war in Ukraine over and over and over, relentlessly. And when the reality on the ground shatters that propaganda cloak, there's going to be a price to be paid by those who have perpetrated that propaganda. It is amazing to see how things are being described in Europe today versus the reality on the ground. And you can go and get the reality on the ground. It takes some work. But this is, if the first Iraq war was the first television war, this is the first internet war. You can go and see what the various mappers are doing. They have access to satellite. There's all kinds of videos. And there's Ukrainian biased mappers and Russian biased mappers and more neutral mappers. And you just take a synthesis of all 3 of those and get a pretty good idea how things are going. And you could do that every day, which we've done because of its importance to geopolitics and energy. We're anti-war, but we have to follow it because it's reality, right? And so the European Union begins to end when peace finally breaks out in Ukraine.
Yeah, and it's incredible how effective this propaganda still is in the continental Europe, even though we are in an internet age like you outlined. Yeah,
it's pretty incredible. But it's scary too, because I'm embedded in American propaganda, right? Every website you open, take a step back. Legacy media has failed so many for so long that's why Substack exists and is popular. I believe that propaganda around climate change and energy opened up a market inefficiency for Doomberg, for example. And because we brought the industrial lens and try to use physics as our guide, we've grown in popularity and created a business out of it. You're not going to find Doomberg-style reporting in the Washington Post. You just aren't. And so the Washington Post has its business model. We have ours, and we coexist. But the propaganda is just, we're actually contemplating writing a book on it, how to sort of think like a contrarian when everyone else is wrong. How do you find that signal? Separate the noise. Because there's an enormous amount of information and data available, but it's all cloaked in propaganda, And so it's just, but over time you have to sort of read outlets for what they are. Like take the Financial Times. Love the Financial Times. I read it every day. There's some great reporting in the Financial Times. And every once in a while there's a clearly BS story that is fabricated that makes its way to the Financial Times. it's usually covered by sources familiar with the matter said, and the article isn't whether that source is right or not. The article is that a source said it. Doesn't make it right. It actually often makes it clearly wrong. Like Ursula von der Leyen's GPS jamming nonsense story that hit the front page of the Financial Times and then got, shoved down the memory hole pretty quickly when it turned out like all the major facts in it were just wrong. So you get a sense for when you know that you're reading BS and which of the major newspapers puts out more BS, which of the independent commentators are pretty good. So, for example, the two gentlemen we mentioned in the earlier questions about oil, like I read their work, I understand their work, but also I understand their bias. And so, but you always have to read it and see, okay, well, this is what they're telling themselves. Where is that wrong? How does that stand up to our own internal mental model? And should we change ours based on anything we read? Like, you don't dismiss it because it's propaganda. There's data in the propaganda. That it exists, for example, is metadata. Why is, The Guardian printing this story? For example, we'll just go back to Ukraine. Again, over the weekend, Financial Times, suddenly, a big front page story about the corruption in Ukraine. Well, as Ben Hunt would say, from Epsilon Theory, why am I reading this now? We posted this headline on Notes with that question. It's because clearly somebody wants Zelensky out. We think it happens to be Trump. And suddenly now it's okay to talk about Ukrainian corruption as though Ukrainian corruption didn't exist before the war, when in fact everybody knew Ukraine was the most corrupt country in Europe. And if you pour hundreds of billions of dollars into a country like that, some of it is going to get pilfered. How much of it got pilfered remains to be seen, but I bet you if you did a full audit, it'd be pretty eye-opening. And this is part of that reckoning that we're going to have to see. The sacrificing of German industry and the way of life of the average citizen of Great Britain, people have to be held to account for how this happened.
This book on how to think like a contrarian, that framework sounds incredibly interesting. You mentioned earlier in the interview, the US is going to war with Venezuela soon. Why is that?
I don't know why. I have a sense for why. We predicted it, but...
What are the incentives behind it then?
Well, it's the largest hydrocarbon resource base in the world. And then the more cynical view is, when you're in the bomb-making business, peace is a working capital problem, and the U.S. has kind of washed its hands with Ukraine. Trump certainly has. And so there has to be an outlet for bombs and bullets. And so let's get a war here closer to home that the U.S. can actually win, in theory. And you get the nice prize of Chevron gets to go and develop all of the oil and gas in Venezuela. And don't forget, Guyana's right there, so the super majors have assembled. And when the super majors assemble, they tend to look around for other resources to go develop nearby because it's expensive to assemble. So Guyana makes Venezuela more valuable to the U.S. Now, this is a very cynical view, but it happens to explain the world, and so that's why we use it as a mental model.
And how do you think it will play out? For example, we've recently seen Russia take a side, it seems, by supplying anti-air defense systems. How do you think this conflict could potentially play out?
Oh, I think the U.S. can pretty much do what it wants in the Western Hemisphere. We note with interest the quasi-color revolution going on in Mexico, for example, over the weekend. I'm sure you saw. This is no coincidence. When Trump and Hegseth say they're going after the cartels are so intimately involved in the oil and gas trade that that's just a very thin mask. That all wars are energy wars, ultimately, resource and commodity wars. So why did the U.S. bail out Argentina? Vaca Muerta. And why is Trump interested in Venezuela? Well, it's because of oil and gas. And why does Trump want the cartels out of Mexico? To replace them with American cartels, I suppose. The cartels have infiltrated Mexican oil and gas production in a way that it's strangling it, right? And so it's gotten too far. And so when we see the Gen K protests in Mexico, and then you follow Mike Benz's work on Twitter and look at the color revolutions, surrounding Russia in the early 2000s, it's all very familiar. The U.S. may claim that it has disbanded USAID, but the tactics and tools and money are still being used, and so I don't know. There are no coincidences, and in a sphere of influence world, the Western Hemisphere is just undeniably under U.S. and their sphere of influence, and this is the game that the neocons are playing. We note with interest to see Lindsey Graham on Fox News, warning Maduro that he has to go. These are all familiar tapes. I mean, when was the last time the U.S. was not involved in a kinetic war, directly or indirectly? And so, law of conservation of bomb dropping says that if you're not going to do it in Ukraine anymore, go ahead and do it in Venezuela. And that's, again, it's hard not to be cynical, but at the reality, it does fit the news, right? So,
what do you think the impact of this would be on financial markets?
Nothing material. I mean, the war in Ukraine has been going on for 4 years now, and financial markets have done just fine. So I don't view this as a financial story. It's a resource story, and it's just look, the military-industrial complexes of the world will be fed. This is back to the U.S. not being broke. Look, the U.S. spends $1 trillion on the military, and what does it get for it? We wrote a piece, chronicling the U.S. Navy's efforts to build ships. It's incredible how much money is wasted. And so, when you run your military-industrial complex for shareholder profit as opposed to national security, back to my point earlier, the market is very poor at pricing national security. This is what you get.
Incredibly interesting. You just mentioned this uprising that we've seen on Mexico. At least clips are going viral on X. Do you think this is the start of something larger, or do you think this is heavily overblown?
Well, I think, look, Mexico hasn't signed a trade deal with the U.S. yet. They might be waiting out the U.S. Supreme Court decision, perhaps. Carney is having some trouble getting his budget over the line in Canada. Again, the U.S. and Canada have not yet signed a trade deal. And so our mental model of the Mexico situation is Trump would like to see regime change there. Or the administration, the U.S. deep state. And so they're using this cartel situation, which has existed forever, as cover. But yeah, I think that this has all of the hallmarks of a sort of standard U.S.-driven, Western-driven color revolution.
And I guess then in this framework, it is no coincidence that Mexico is another incredibly well-endowed country on the resources side.
Mm-hmm. They used to produce 4 million barrels a day, and now they produce 2. They have enormous natural gas. Look, the Gulf of America used to be called the Gulf of Mexico. And there's an enormous resource base in that area. And Mexico is very well endowed with oil and gas. Again, not constrained by geology, it's constrained by politics. In this case, corruption and cartel influence and robbery by the cartels, literally tapping pipelines and stealing Pemex production. So in many ways, unfortunately, Mexico is a bit of a failed state in the sense that the cartels are probably more powerful than the government itself, and so there's truth to the cartels being a significant national security issue to the U.S. Like there's always an element of truth in what Trump is saying. Fentanyl situation is real, much bigger problem flowing through Canada to the U.S. than the Canadians would ever admit. But we believe Trump is correct. The nexus of China and then Mexican cartels and Chinese cartels operating in Canada is the heart of that problem, and it kills 100,000 Americans a year. It's hard to not argue that. It's hard to argue that this isn't a war-type situation and requires a firm response. But in the end, Mexico is energy rich, and it's right there, and so we'll see.
I would also love to get your take on the situation in the Middle East, specifically Iran, Israel. Of course, we've seen a flash in the pan type of war situation earlier this year. What are the incentives in the region if you look at, for example, energy, commodities, financial incentives? And is there a potential for that conflict to restart?
Well, we have a contrarian view on that war. And our mental model for that war starts with the analysis and observation that the U.S. is chronically short air defense missiles. The war in Ukraine exhausted U.S. supply. And the U.S. supplies 80% of Israel's air defense. And we were shocked when Israel attacked Iran in that decapitation strike. And when that decapitation strike failed, we said immediately internally that this war needs to end soon because Israel cannot win a war of attrition with Iran. And we believe it was Israel that sued for peace and needed a ceasefire more than Iran. We were validated in this observation when on the third day, I believe it was, the Haifa refinery was, severely damaged by a targeted missile strike by Iran, piercing through Israel's air defense. We wrote a piece last October called October Surprise. The first time they sort of exchanged missiles with each other, we were surprised to see video of Iranian missiles getting through. And even the Washington Post admitted that targeted ballistic missiles, well-targeted ballistic missiles were getting through and hitting their targets. And because Israel has basically 5 power plants and 5 water treatment facilities and 2 natural gas fields, so you could knock those 12 targets out and make the country unlivable, we had thought that Iran had achieved mutually assured destruction with Israel. Yes, of course, Israel has nuclear weapons, but Iran could make Israel unlivable pretty quickly. And so we don't think war can happen again, not for a long time, especially if, the U.S. gets itself busy here with Venezuela, because Iran has thousands of missiles. Russia and China have been rushing to shore up Iran's air defense systems. They're probably hardening their internal domestic intelligence surveillance capabilities to make sure that the type of decapitation strike that was attempted is harder to do in the future. And so, Israel is vulnerable. One of the overarching mental models of geopolitics is the fact that missile technology is developing faster than missile defense technology is. And that profoundly changes things. It's not like the geolocations of those power plants and water treatment facilities aren't widely known. Now, it would be a war crime to take out those facilities. But the phrase war crime is oxymoronic. I mean, we think all wars are crimes.
Always incredibly insightful to get your take, Doomberg. Please talk to us for a second about what you do over at your Substack.
Yeah, so we actually have 2 Substacks now. We have Doomberg.com, where you'll find all of our work. And then we also launched a sister publication called classicsreadaloud.substack.com. One of the Doomberg co-founders and its editor-in-chief is very passionate about great classic literature. The mission of that project is to curate and resuscitate some of the great short stories, mostly from a century ago or older. That's been a fun project. It's been a big hit. So if you're interested in that, you can go to classicsreadaloud.substack.com. But all of our energy, finance, geopolitical work is at Doomberg.com. And thanks a lot for having me back on the show, and great to see how well you're doing with it.
Really appreciate it, Doomberg. Thank you so much for your time and your insights today.
You're welcome.
This podcast is for general information purposes only and does not constitute investment advice, an offer, or solicitation to buy or sell any securities. The views expressed are those of the host and guest and do not necessarily reflect the views of the company or their affiliates. Guests on the show are not compensated for their appearance. Certain discussions may include forward-looking statements subject to known and unknown risks and uncertainties that could cause actual results to differ materially. Listeners should do their own research, consult a licensed financial advisor, and not base any investment decisions solely on the information discussed. For a full disclaimer, please visit our website, and for full disclosure and risk factors of any companies referenced, please see full available disclosure and risk factors on their CEDAR Plus at www.cedarplus.ca.